Hello, everybody, and welcome to a series of conversations for year-end tax planning so that we can help you get the highest use of your money and save you some money on tax while you're at it. And this is a timely conversation to help you take advantage of any last-minute tax planning opportunities, as well as plan for the year ahead. And this year, it's a especially important topic given the number of significant tax changes our administration is proposing, in addition to the ongoing pandemic that some of us are having to deal with. And that's why I decided to invite a few tax leaders from our professional community to hear from them firsthand what they might recommend for a variety of situations that you may be facing. And in this conversation, I'm happy to invite Teresa Mason to talk about year-end planning for owners of closely held businesses. Teresa is a second-generation CPA and managing partner at Collins, Mason and Company. She's been advising businesses on tax and financial matters for over 25 years, and she is passionate about her clients' success, as is her entire team. Because especially through the pandemic, Teresa and her team of 12 have been helping their clients pivot and take action to protect their businesses, their employees, and of course, their customers in this ever-changing environment. So, hi, Teresa. Thanks for being here.
Thank you, Roman. It's a pleasure to be here. And, since the pandemic hit, we actually have grown to 17 team members now. So
That's a good update. I'm glad.
business has been good. Thank you to the federal government in many
Well,
ways.
yeah, I bet you're probably one of many that are having a hard time even staffing at this point, but that's great to hear that your team is growing. Did I get everything else right?
You did, you did. Thank
Good.
you for that kind introduction.
Well, it's a pleasure, and I'm really glad to have you on, and thanks for taking your time. I know you're volunteering your time to help us and our client community, a lot of whom are owners of closely held businesses. And I mean, there's a lot going on in any given day for a business owner, but I think especially as we approach every year end, there just is a number of things that we have to think through, or at least should. Um, just take advantage of any opportunities that might exist. So I know that we wanted to break this up into three main kind of segments. One being some of the general advice that you would have for us as business owners. Second segment would be any COVID specific considerations as they relate to tax planning. And then last but not least, talk about some tax changes that might be taking place this year or in the year ahead. So I'll leave it up to you to take it in whatever order you like. What do you want to start?
Let's just start out with the general stuff to kind of
Okay.
kick things off a little bit. And a lot of this comes from the frustrations that I hear from my clients, the biggest being getting in touch with anyone at a taxing authority these days, whether it be the IRS, the Franchise Tax Board, local city government. It's just such a challenge that it's one that we face on a daily basis. And it's not unusual to, unfortunately, with the IRS, to get on the phone and be put on hold for 2 hours to be told that we need to transfer you to another department.
Mm.
And so the one piece of advice I give business owners and individuals is you really, really have to be patient as the IRS and the other taxing authorities work through their huge backlogs. Many of them are still working remotely and with reduced forces. And so it can take up to 6, if not more, months to get an issue resolved. And most of the notices that are coming out are auto-generated notices that come from the IRS, particularly. And it will take some back and forth to get issues resolved. So all I can ask for is patience and understanding, because there's unfortunately nothing we can do to move the ball faster.
What kind of things are you seeing, Teresa, that business owners might be receiving or dealing with as they have to reply to some of these notices, or if they're making any, or if they're initiating these conversations? What are you seeing the most?
Generally, they're penalty notices, or we didn't get your payment because they haven't processed the payment, even
Mm.
though it was mailed, certified mail, and signed for that it's there. They haven't processed it yet. So a lot of them are timing issues that ultimately will resolve themselves. But quite often, a conversation still needs to take place regarding penalties. If you are in the case where you've got some penalties for late payment of taxes, and you were significantly affected by COVID and business shutdowns, there's a really good chance that we can get those penalties waived. But it will take a lot of back and forth to make it happen. And so patience is the key virtue that you need to exercise at this point, unfortunately.
Well, it's good to hear, but I know that getting an IRS letter is never a pleasant one. And so it's a bit
Exactly.
unnerving. And so you just want to get to the bottom of it and figure it out. And if you're saying
Exactly.
that there's going to be a 2 hour wait or more if you're sending in a letter, it sounds like it's patience, but also just a little bit of faith that you're not going to end up
Yeah.
getting into too much trouble with the IRS and just letting time take its course.
Yes, I mean, I've gotten very good at multitasking, listening to the IRS on hold music while I'm working on something else. Um, but the main thing is if you do get a notice, don't ignore it.
Mm-hmm.
Either give it to your tax professional to deal with for you, or get on the phone yourself, or respond in writing. If you've got proof that you sent a letter, certified mail, they're going to be much more lenient than if you just ignore the correspondence to begin with. So it's really important to respond to any notice that you get from the government.
All right, good good advice there. Anything else that you're seeing in terms of, I think, general advice for year-end planning for business owners?
We are starting to see an uptick in tax audits again.
Mm.
During the pandemic, there was very little auditing activity taking place, but we're starting to see notices come out again. And the biggest thing for small business owners is record keeping. I can't emphasize how important it is to have appropriate records to validate deductions. Many people think that the credit card statement that shows the vendor and the amount paid is significant proof to justify a deduction. It is not. You have to have the actual receipt that supports that deduction, or else it will be disallowed. And so record keeping is huge for businesses to be able to support those deductions.
Do you have any tips on how to keep track of all these records, whether it's in paper receipts or electronic receipts, and how to document them?
Yeah, I would not keep paper receipts because that thermal paper that you get from many vendors will disintegrate and become a blank sheet of paper over time. And so even though you have a piece of paper, you have no idea what was written on it. And so I think keeping them digitally is the best way to go. And depending on what accounting system you're using and what credit card you're using, quite often you can capture a receipt on your phone and attach it directly through the credit card application or through QuickBooks. And so it's right there. If you need to produce a receipt for a particular transaction, you would just go to the transaction and it would be attached to that transaction. So very efficient.
It's a good reminder, because I know for us, at least, our outsourced bookkeeping firm doesn't really ask us for receipts. They just reconcile the books. And,
Right.
It sounds like we should remind them to also add the receipts to it.
Yeah. And it's just getting into the habit of it. I mean, in the
Mm-hmm.
old days when we used to be out in our cars running around town, you kept a little envelope in your car and you would just stick it in there. And at the end of the month or quarter, figure out what you needed to do with them. But it's much better if you capture them at the time the transaction is happening.
Right. That's good.
Yeah.
Anything else come to mind in terms of general best practices?
Well, since we're focusing on businesses, one of the things that is really important for S Corp shareholders this time of year is to look at how they've received their income throughout the year. Because there's this little section of the code that says S Corp shareholders have to pay themselves a reasonable compensation. Reasonable is a very gray area. And the general guideline that I usually give my clients is that 50% of their income or more should come from wages, and then the other through distributions. People want to put more towards the distributions because those are taxed at a lower rate and are not subject to payroll taxes. And so it's really important to pay attention to that, because the IRS knows it's an area where they can probably pretty quickly raise some money through audit work. Because a lot of people are trying to push more into the distribution side of things. So this is a good time of year to take a look at that. And if you have to make any adjustments, I would do it sooner rather than later, because the payroll companies get slammed right at the end of the year.
Yep, that's good advice.
It's a good time to look at it.
Do you have any suggestions as to how an owner, especially of a smaller business, might find what a reasonable compensation would be for someone like themselves?
Well, you can depending on what industry you're in, there's going to be online resources that will give you some industry averages. But a lot of, you just have to be able to support it. If you were an attorney and you were to go out and get a job as an attorney for someone else, what would you be paid? It's not going to be $50,000 a year in San Francisco. And so you just have to have some basis of which that you can support to show why you've chosen that number. And there's lots of resources online that you can use for that. You don't have to go through and do a full salary compensation survey or anything like that. It just you have to have some basis for your rationalization.
Mm-hmm. Good.
And again, that number of 50% or more is a good benchmark, because it makes sense that owners are compensated for the work they do in the business, as well as for the risk of owning the business.
This is actually something that another person I spoke with recently talked about. He's a business broker. And he had talked about the value of actually giving yourself a reasonable wage, because at the time of putting a value on your business, someone else is going to say, well, if I'm going to hire somebody to operate this business, what am I going to pay them?
Correct.
And it actually will help with evaluation as well. Not exactly year-end tax planning issue, but it's a business planning issue.
Well, it's funny because since you bring that up, the way I approach tax planning is that the tax rules should not be the leading indicator of how you make business decisions. They help you make informed business decisions based on the consequences of your actions. But, quite often you don't want to minimize your taxes. If you're going to be expanding and needing to do some bank financing, getting a line of credit, you're going to need to show some profit and some cash flow. You do not want to drain it all out of the business just to reduce your taxes. And so it's one consideration, but not the only consideration.
Right. That's a good point. I think a lot of people who are individuals that are used to working with a tax professional to file their personal taxes, it's more of a filing exercise. With, I think, as a business owner in working with a tax professional, it's almost becomes a forward-looking business planning conversation and seeing how taxes align with that.
Correct.
Yeah.
And, I do have a lot of clients that in these last couple of months of the year, they also look ahead to see, what do I have coming up in the first quarter? Should I buy that new truck this year instead of next year so I can get the depreciation this year? Or do I want to push some expenses into next year because I'm expecting it to be a much more robust revenue year for me? So those are the kinds of things to be looking at this time of year.
So I know we were going to put, I think, COVID and operating a business during time of COVID as the second segment, but wonder if we can just change the order, because you're talking about year end and planning ahead for next year.
Yeah.
Like, what are some best practices for year end? And then also, based upon all the changes taking place, what do you or are you recommending that your clients think about, given where we are in the tax changes that have been implemented and are likely to be here next year?
Well, there's one big change that has been implemented that has many people scrambling, and that is the new pass-through tax for state taxes. And what's happened under the Revenue Act of 2017 is, on the individual side, you are capped based on the amount of state income taxes you could deduct on your individual tax return. Well, this new rule is a workaround around that. If you have a pass-through entity, meaning a partnership or an S corporation, you can elect to have the individual state tax paid at the partnership or S corp level, which means that you've got to have your books up to date before the year end. You have to estimate what your taxable income is going to be, and you have to make that state estimated tax payment to the federal government before 12/31, so it can be a deduction on your federal return for this year. So this is a very new and different way of managing the state tax liability, because essentially what it does is it creates a credit for the individual taxpayer for the amount of tax paid by the business. It's very complex. Not all the forms are out yet. Not all the rules have been codified and written. And so it's still a bit of a moving target, but the biggest advice is to get your books up to date and know if you're going to have taxable profits or not for this year. So you can deal with this before the calendar year end.
So I want to unpack that a little bit, because it sounds different than what we've had in prior years.
Correct.
But I do have a simple question. You said pass-through entities. Would an LLC qualify as that hasn't elected to be taxed as an S corp?
It would qualify if it's a multiple member LLC, not a single member LLC. A single member LLC is a disregarded entity, and you're reported as a Schedule C. And so that is not considered a pass-through entity for this particular credit.
So sole proprietorship or a single member LLC would be effectively disregarded from this.
Correct.
Okay.
Correct.
So another question then would be, if someone is currently, as of November 1st, 2021, taxed as a disregarded entity, let's say it's a solo member LLC, is there still time, and is there potentially value in electing the S corp so that they could take advantage of this tax credit?
There is a possibility for that. You would have to do what they call a late election filing.
Mm-hmm.
And so an S election is really an automatic election, but you have a time limit within which you're supposed to apply for it, which is the first, I want to say 45 days of the calendar year. We're well past that. But I have done lots of late S elections and I've never had one thrown back. And so it's a pretty normal process to go through. And there definitely could be some benefits depending on the individual's personal tax situation and how much of a liability we're talking here.
Okay.
Because if your state tax liability is very large, it might make a lot of sense to do it.
So let's talk about that now. So can you explain the technical, like what are the dynamics here? How do you, as I understand, get the business to pay the individual state tax liability?
Yes.
Becomes an expense to the business, and then the individual taxpayer gets a credit. How does that work? Take us through
so
it.
So it's treated almost like withholding is at the business level. And so the business will withhold from the individual owner 9.3% of their their income for the year and remit that to the state of California. And at the end of the year, they'll get something similar to a W-2 that says that this is how much income you have and this is how much withholding that you get a credit for on your personal tax return. It's probably all going to be part of the K-1, but we haven't seen those forms come out yet. So there's a little bit of a gray area still.
So that's one of the ways to increase or pass the state tax as a deduction that's not capped by that $10,000 SALT limit.
Yes. And most people that live, work, and own a home in the Bay Area will all hit that limit.
Absolutely. Yeah, if they're itemizing.
Yes. Yes.
And is that something that I know you said it's new, but I assume you expect this to stay
going
forward.
I do expect it to stay through 2025 when all of the other 2017 tax provisions are sunsetted.
Great.
So, yeah.
Well, that's a good tip. So folks, hope you were taking notes. And if you have questions, reach out to your account. If not, I'm sure Teresa wouldn't mind you sending her a question. But
yeah, it is fairly new and there's still a lot of unknowns. But the best thing you can do to be prepared to take advantage of it, if you decide to, is to have your books and records as up to date as possible. So you can make these estimates before the end of the year.
No, that's great. That's a good tip. Since we're on the topic of these tax changes, both this year and the year ahead, anything else that you'd want to mention to our community?
A couple of things. If you're an S corporation, they have issued new regulations on reporting your S corp basis as part of your S corp tax return to the IRS. It used to be a very simple one-page worksheet, and many people actually didn't even complete it because if you had enough basis and your loss, you didn't have losses, it was not an issue. But it's going to be required going forward, and they took it from a little one-page worksheet into a 3-page dissertation, shall we say? And so it's going to be more challenging to complete because you're going to have to figure out what the beginning basis for each shareholder is on the cash basis, and then incorporate the current year's changes to that. So there may be some additional work depending on how you've kept your books and records related to this new form that needs to be filed.
And that's a requirement, or that's an elective in order to affect the basis?
It's a requirement because income losses and distributions from an S corp, a lot of how they're treated on the individual tax return depends on whether you have basis or not. For instance, if you don't have basis, but you still take money out of your S corporation as a distribution, then you have a capital gain situation because you've taken distributions in excess of basis. If you have losses, they could possibly be limited if you have a basis issue. So the IRS is looking for additional information so that they can determine whether these distributions and losses are applicable on the current year's tax return.
And that's an annual requirement?
Yes.
And what if someone hasn't filed that form?
Well, it just started this year. It's brand new.
Gotcha.
Brand new. So it's going to be part of people preparing their returns for 2021 in the spring of this next year.
And I would imagine the value of keeping or recording the right basis is that you can also have some tax-free distributions.
Correct. Absolutely. As long
And
as you have basis, you're good to take money out.
and is that something that our listeners should reach out to their accountant about? Is that something that they would
Most
otherwise
definitely.
know on their own?
Yeah, no, most definitely I would reach out to your accountant CPA about this, because it is a complex issue. I mean, there's not much in the tax code that is straightforward anymore. Um, Except everything is income. That's the one thing, that's the golden rule. But it can be complex in determining your basis. And quite often, if you have not been doing so, you may have to go backwards and go through past tax returns to develop what the current basis is. So it can be a challenge.
Right,
And
because the
again,
basis should be
good
tracked
record
from the.
keeping.
I'm sorry, go ahead.
Good record keeping, again, is really important here.
Yeah, so the basis theoretically should be tracked from the date of the business being registered or incorporated, and
Correct.
if that's been a number of years for some folks, that will be a bit of backward-looking data
Yes.
and establishing the present basis. Is that
Yes, absolutely.
okay?
And a lot of people don't track that stuff until they have an event where they need to, whether it be distributions, a loss year, a
Hmm.
partner, a shareholder exiting the business. And so it is something that's not always tracked, and it is an important number to know.
And is this something we have to do by the end of the year, or is this we have until we file our taxes or the extension?
We have until the tax return is filed.
Great.
Yeah.
Do you want to talk a little bit about what the basis is made up of, or do you think that's fairly straightforward for most folks?
Well, it is a moving target, because it starts with what you contribute to the business, and then added to or subtracted, whether it's an income year or a loss year, added to or subtracted, whether you contributed additional capital to the business or you've taken distributions out. It's usually fairly easy to develop on a spreadsheet in the old method. I haven't seen the new 3-page worksheet,
Hmm.
and so that could change things a little bit. But it's generally, as long as your records are good, it should be able to be calculated.
There you go, folks. Here's good old government keeping us on our toes.
Exactly, exactly. And looking forward to 2022, um, they're getting much closer on the Biden tax bill.
Hmm.
I would bet to say most of my clients are going to see tax increases. And I think that there's going to be some changes in the estate tax as well. When we get to talking about the COVID issue, there is one provision in the bill that will change some of the benefits to the COVID rules. So I'll cover that after I've gone over that.
Okay. Well, we can pivot at any time,
Okay.
unless
Okay.
there's something else around year-end planning or looking ahead. If there's anything that you wanted to mention that folks start thinking about, we can pivot to the COVID.
Well, and this kind of jumps into the COVID stuff too. If you received PPP loans and took significant distributions because you had a bunch of extra cash, developing this basis thing is going to be huge. It's going to be
Because
big.
you want to keep that separate, obviously.
Yes. Yeah. Yeah.
I imagine by this point, most people that took out PPP loans would have already known whether it's forgivable or how much of it is forgivable and what is not. Or are you still seeing some of those up in the air?
Most of my clients that got the first round of PPP have all had their loans forgiven.
Mm-hmm.
People were very careful to do exactly what they needed to do to make that happen. And folks are just starting right now to go through the process of getting the second round of PPP loans that happened earlier this year forgiven.
Mm-hmm.
So I think that once there was clarity around what you had to do, people went ahead and followed those orders. And so most of them are getting 100% forgiven.
Oh, that's wonderful to hear.
Yeah.
Well, I know that some folks that I've worked with that have had some part of their loans that were not forgiven, they're still keeping them because it's very cheap money.
Very inexpensive money.
Right.
Yes.
Yeah.
Yeah.
And they can use that to continue to grow their business and
Correct.
see whatever.
And there's also still SBA economic injury disaster loss money still available.
Mm-hmm.
And so when they first came out with the EIDL loans, they were limited to $150,000. They increased that to $500,000. The underwriting is very straightforward, and it's payable over 30 years after no payments the first 24 months, and then payable over 30 years. So it's a very, very inexpensive money for growing your business, pivoting your business, opening a new location, that kind of stuff.
And you mentioned that it's been expanded. So who should
Yes.
consider applying for that, in your opinion?
Anybody who is economically strapped because of the virus and shutdowns, or anybody that wants to expand their business, because it's cheaper and easier to get than bank financing.
But you still have to show some degree of economic impact to your business, or is it available to anybody that may want to grow their business?
It's available to anybody that may want to grow their business.
Oh, how interesting.
Yep. Yep.
And that goes through the SBA.
It goes to the SBA. It's a very straightforward underwriting process. In fact, I have one of my clients is a yoga studio, severely impacted by the impact by the COVID, and does a lot of training of yoga instructors. And so, almost all the yoga studios in the city basically went out of business when the pandemic hit. He's one of the ones that stuck it out and stuck through it, and now he's looking at is expanding into other locations in the Bay Area. And the EIDL money is perfect vehicle for that kind of stuff.
That's a really good point for folks to consider. I didn't realize that it can be accessed without having to prove hardship. Absolutely. So there you go.
The one thing to bear in mind is once you go over a certain amount, I'm not sure what that amount is, then it requires a personal guarantee from the owners of the business. They do a transcription request from the IRS to make sure that what you've provided to them agrees with what the IRS has on your tax returns. They're looking at 17, 18, and 19. So it takes time because there's so many people applying for it. But if you're looking for some expansion money, it's a good place to look.
Another reminder for record keeping, and record keeping.
Exactly. I'm becoming a broken record here, I think.
Well, sometimes we need to hear things more than once. And when it comes to taxes, I think that's fair to say that we need to hear it more than once.
And it's not a fun thing. It's, paperwork is never something we all wake up and say, oh, I can't wait to do my receipts this day, but it's an important part of being a business owner.
Absolutely. Anything else as we talk about COVID and either businesses that might have still had some negative impacts or those looking to grow that you would give them some helpful tips and advice on?
There is one other credit that we've been seeing a lot of people take advantage of that were severely impacted from the gross receipts standpoint. And it's the economic retention credit or employee retention credit. Sorry, I have economic on the brain. And essentially it allows you to reduce your payroll tax liability by $7,000 per employee per quarter, with the main criteria of qualifying being that your revenue for 2021 by quarter is 20% less than it was for that same quarter in 2019. So a lot more people are qualifying for that than did in 2020 because the percentage in 2020 was 50%. Now it's down to 20%. So the only caveat here is that you cannot use payroll for PPP forgiveness and the employee retention credit. It's got to be one or the other. So if you got PPP2, you need to look at the payroll that you're using for forgiveness and then look at what's left over to see if you're eligible for this credit. It's fairly simple to apply for. You basically file an amended Form 941, which is the quarterly payroll tax return. And after a very long wait, you'll probably get a check in the mail.
Well, if we're getting a check in the mail, it's worth the wait, but oftentimes it's knowing what we're waiting for that's also key. Correct. So just to confirm, that 20% reduction of income that needs to be demonstrated, that's pegged to the same quarter in 19, not Correct. 20. So both last year's credit and this year's credit goes back to 2019, but the percentage loss is different. So it makes it easier to effectively qualify.
Yes.
And it's quarter by quarter, not an annual.
Correct. So just for round numbers, if in 2019 second quarter you did $100,000 in revenue, in 2021 you did 75, that's a 25% reduction. So then you would qualify. And Excellent. You could file an amended tax return.
And do you file this, I assume, for any specific quarter using one form? You're not having to refile 4 different times.
Correct.
Good. That's great. Anything else along that vein?
I can't think of anything. If at all possible, I would suggest trying to get PPP2 forgiven before the end of the year,
Hmm.
just because it makes it a lot easier for tax reporting if it doesn't flop over again to the next year.
Hmm.
Um, there's a lot of moving parts. It's going to be another challenging year to prepare tax returns, and there will probably be lots of extra questions for our clients based on the new information forms that we need to complete and fill and send in. So, be patient, work hand in hand with your provider, and we'll get through it.
Are you expecting or seeing any change in when folks file as opposed to, on time, especially for corporations? I know we usually file on time, but in terms of our personal returns, sometimes small business owners will kind of kick that can down the road. They'll pay what they think is due, and then they'll file in October. Are you seeing a trend there? And do you have any thoughts on whether that's recommended or should be, or
Yeah.
not be relied on?
So this year, almost, I shouldn't say everyone, but almost every single one of my business clients went on extension,
Mm-hmm.
mainly because we didn't get clarity around the PPP loan forgiveness issue from California until early May.
Mm-hmm.
And so that pushed everything out. So anybody that got a PPP loan was automatically put on extension. And most of my clients that are pass-through entities do tend to go on extension. I actually think you get a better product from your CPA if the work is done in the summertime, because we're not tired, stressed, and overworked. We get to spend a little bit more time and ask more in-depth questions and
Mm-hmm.
provide you better guidance. And so I really like it when clients go on extension.
Well, there you go, folks. Take it easy on your accountants and CPAs and hang out with them more in the summertime. Uh,
Exactly.
anything else that you want to leave our listeners with? Any year-end tips, whether they are kind of year after year best practices or something else that might have come top of mind specific to this year?
I haven't, I can't think of anything off the top of my head other than that the market has been doing so well, and people like you are doing such awesome work for their clients that some people are having some capital gain issues that need to be
Mm-hmm.
looked at before year end. And so coordinating with folks just like yourself is really important at the individual level, I think. Just doing a touch base and seeing where things stands before year end so you actually can do something if you choose to
Mm-hmm.
is an important thing.
And I think on that vein, it's also a good reminder for all of you that have a retirement plan through work to find funded if it has to be funded by December 31st, which means those payroll deductions.
Right.
And I'll let you confirm if what I'm saying is accurate, if there have been any changes, but
No.
SEPs and all of those can be filed or
Yeah,
funded later. But I believe the employee contribution portion has to be done by December 31st.
that's correct. That's correct. Some like 401k matchings
Mm-hmm.
from the employer or SEP contributions, those can be made in the next calendar year. But if you're an employee having withheld from your paycheck, it has to be done before the end of the year.
Great. Well, Teresa, this has been very insightful. I've walked away with at least 3 or 4 things that I did not know going into this conversation. I hope those folks listening or watching will benefit as well. And I'd like to ask before you go to tell us a little bit about your work and your firm so that if anyone who's watching is looking to connect with an accountant that fits exactly what you do, they'd have a good resource.
Great. Thank you, Roman. Well, as you said, I'm second generation. My mom actually started the business after working for Deloitte for many years. And we now have a team of 17. And we do both tax preparation, planning, consulting, and outsourced client accounting. And so we have a lot of small to medium sized businesses that are great at what they do, but don't want to do the day-to-day accounting work. And so they outsource all of that to us. It certainly makes the tax preparation very seamless at the end of the day when the same company is doing both your accounting and your tax work for you. We work mainly with what I would call complex groups. And so flow through entities are very common to what we do. We may work with a family group where grandma and grandpa did really well. Their kids are now running the business. Their kids have kids. There's trusts and several different entrepreneurial businesses involved. And we'll kind of wrap our arms around that whole relationship. So we're not the go-to person for someone who is very straightforward. So own a home, 2 wage earners, and that's about it. If you've got some complicating factor, we're a good one to talk to.
Owning a business is one of those, I imagine.
Absolutely.
Properties. So what type of business? I don't know if it's by industry, revenue, or size. What do you find as being the sweet spot where you do your best work?
There's a couple of things we definitely don't do. We don't do any venture capital backed stuff. We don't do any technology, and we don't do any medical devices. We do a really good job with small manufacturers, hospitality. So we've got several wine shops and restaurants, caterers, that sort of thing, professional services, and anybody who owns and holds real estate. So
Great.
those are kind of our sweet spots.
So I know you have a lot of clients that you have to service, and you service them very, very well. I know you take personal care of each and every one of them. I'm going to put the information in the show notes so that folks can reach out if they have any further questions. But it's been great having this conversation with you. Thank you. And if there's anything else you want to mention before we go, this would be a great time.
No, I think that's good. I just wanted to thank you for the opportunity, Roman. This has been really good.
Thanks, Teresa. All right. Be well. Thank you.
Take care.